Hello traders, welcome back to ChrisFX. Today we will go through the best strategy that I have ever shown in this channel. The reason for that is this hat, the scammer's hat. I'm rocking the scammer style. Now I'm going to go ahead and show to you how to avoid liquidity grabs in Forex trading. And for our today's example, we have GBP USD. We are on the 4-hour chart, as you can see right here. We can see that we are in a massive downtrend, and of course we are playing the most recent price action, as we always know. What do we see? Let's take it step by step. We see that we broke this area impulsively, so we have a break of structure right here. Let's say BOS. Okay, so we broke very impulsively on the 4-hour chart with this massive candlestick, this massive 4-hour candlestick that we see right here. Now of course we're waiting for price to retrace back into our order block, and as I had said in my previous video, we take this gun box or whatever you want. You can use the Fibonacci tool and have the 0.5 value, and it is preferable to have price reach back to at least the 50% of this order block. Now let's see what happens right here, and when we approach this area I'm going to scale down to the 15-minute chart. Once we are inside here, I'm scaling down to the 15-minute chart. So let's see, let's move on and let's see what's going on. Okay, in this instance, as we had shown in the past, and of course it is completely valid but not the point of our today's video, this over here signifies a break of structure because we broke below this structure with this wick right here. So let's move a little bit forward and let's see what we would be doing in the past. In the past, now we would be scaling. Let's say that we were back here. We broke structure in a 4-hour order block and we broke a 15-minute structure. Okay, we would scale down to the 3-minute chart, let's say. We would identify the order blocks, which would be like this one, let's say, and this one right here, and we would be placing pending orders on these order blocks. Of course, this can be profitable, but what I have noticed recently, because more and more people are trading the order blocks, now I have seen that these strategies work less and less, and probably it is just my opinion, but I came to this conclusion after hours and hours of back testing and also of forward testing. So let's see what would have happened right here. Okay, we would be activated here, we would have lost this one, and then for the second one we would be activated once again, and before we would know it, we would reach only 1.2 to 1, maybe a little bit more in this instance. This would be a 2 to 1 trade, okay, and then it would come back and stop us out. And as far as you know, I'm taking at least 3 to 4 to 1 in every single trade, and if you are able to take even more in any single trade, it is even more preferable. Of course, this has to do with your backtesting. If we could win 2 to 1, let's say 70% of the times, we would never change this strategy with anything out there. But let's proceed and see what our today's strategy is all about. So let's switch back to the 15-minute chart. These are the two trades that we would not be placing with our today's strategy. What we would be waiting for this first break of structures, which one would be right here, of course, these small breaks of structures that we see right here, and we wouldn't be entering any trades right here. Nonetheless, we would wait for a deeper retracement, okay, and then we would wait for a break of this bigger structure that is identified by this line right here. So instead of just waiting for these, many traders will show you just wait for this liquidity to be grabbed. What I would tell you in this occasion, and what you can do, of course, is wait for this next structure to be broken for you to place a trade. And normally this will be done by banks gathering more liquidity which lies above this area right here. And as we can see, we grab this liquidity. Of course, we don't know when to enter. We will be looking for a break of this larger structure right here, because again, most people waited for this break of structure and for this break of structure right here, and then they entered their trades right here and they got stopped out, of course, if they would be going for more than 2 to 1. And let's proceed and wait for a break. You see, even higher grab of liquidity right here. We grabbed liquidity which would lie above here, and then also with this candlestick it threw people who would place their trades right here. So what we are doing with this strategy, once again, we are waiting for a larger break of structure. Not for this, once again, this is a minor structure. Once again, we are waiting for a break of this larger structure down here. And let's see, let's move a bit forward. Yep, I moved too much forward. We broke the structure very impulsively, and now we can identify order blocks in this whole area right here. Of course, nothing guarantees that price is going to be coming back here, but this is another way to get into less trades, of course, but to be even more sure when you are entering a trade, not to be stopped out by these movements that you see right here. Okay, you get in a small 2 to 1, get stopped out. Then again, over here, if you identify, let's say, this as a structure, let's go a little bit back, and you say, now this is the real movement. Again, you place a trade somewhere around here. Then if you are very tight with your stop loss, again you get stopped out. Okay, so let's see what happens when we are waiting for a break of a larger structure, which is this one right here. Okay, and I will identify this larger structure with this ellipse tool, or however the hell this one is called. Again, you don't have to go down to the 3-minute chart or the 1-minute chart to identify your order blocks here. You don't have to be so picky because there's many order blocks, but of course you can do that as well if you want. We can stay on the 15-minute chart in this occasion, and what I would say in this occasion, I would identify, let's see, let's zoom in a little bit. We have an order block right here, but probably I would go for this one right here. I will leave that as yellow and probably increase the opacity a little bit. Right there, it's fine. And we have this order block. Now you can place a pending order at the beginning of it or the 50%. I would go and place the order, I think, at the beginning of this order block, and if this one fails, we will see which one we are going to be identifying up here. But what we can see, why this order block right here is very important compared to this one, for example. From this one, the movement which broke this structure right here was initiated, and you can argue about this one as well, of course, even though I can say that the structure was broken with this candlestick and it was initiated by this order block. Still, you could use both order blocks and place pending orders, either two small pending orders, one is here, the second one would be here, or you can just initiate it from here until here, but for the moment we will leave just the one of those two. Okay, and let's see how this one would have worked out. We get activated into the trade, as we can see right here, and now we get stopped out of the trade. It is totally fine, because in this instance, this of course happened very quickly. Let's say this is a -1 right here. We would be entering on this wick, which is an order block itself, or on this one right here. In this instance, for you guys and girls out there, not to say that you are doing it in retrospect, of course I'm doing it in retrospect, but I don't remember exactly the example. Let's say that this was a real time, I would be entering exactly right here on this 15-minute close, okay, because let's say that I didn't have the pending order right here, and you can go for whatever you want, okay, as a target, and let's see how this plays. If I would get stopped out of this, I would place a third entry up here, by the way, so let's see what happens, and let's see how far this thing would have gone. So in real conditions, I would target this thing right here. It is a 5.2 to 1 almost, and if you consider the fees of your broker, this would be a clean 5 to 1, okay, and the 0.2 would pay the fees and all that stuff. And of course some people may target down here as well. I think this went far enough. You could have, no it didn't, did it? Let's see. Yeah, you could have targeted a total, of course you don't know that, a total of 9.9 to 1. What you can do in these occasions, of course, just remember that this is a very important thing that I usually do. First target could be right here, second target could be at the imbalances that we see over here or the beginning of this order block down here. This is another way, I have talked about it in one of my previous videos, that I would target for the second one. Or if this would be the first target, let's say, I would still do the same thing. I would target either the beginning of these order blocks or the middle of this imbalance that you see right here. If I zoom in, okay, if I zoom in right here, you see there is an imbalance identified by this week until this week right here. So I would target maybe the beginning of this imbalance, okay. So in this occasion you would have gone an 8.6 to 1, okay. So this was the strategy that I want to show to you today. Let's see how this played out. It played out even more. So for people who played this order block right here, let's zoom in and delete some stuff right here, okay, and then they went ahead and placed another order on this week right here, this order block right here. It is a win for them, of course, because look at those two beauties that you could have gone. Now you could have targeted, of course, the beginning of this order block, so right here a 9.3 to 1, okay. So this would be a very realistic thing that you could have done in these two trades. And of course these happen to be two very beautiful trades. I have shown this similar example 1 year ago. I showed this exact example right here, okay, like with the first break of structure you place your pending orders right here, but in this occasion we waited for a more clear break of this structure, and then of course you can place orders on all of these 15-minute order blocks. One would have been here, so this would have been a stop. -1, we would be targeting first here, second here, okay, -1. Second one would have been right here. We would have closed like, let's say 70%, so 3.7% because it's 5.2%, so 3.7% here and the rest of it here, so let's say a total of 5.5%, okay, would have been right here, plus 5.5% for this trade, -1% for this trade, and this one we would have targeted only that one, or probably first partials here. I don't think so though. We would go straight for this one, so a plus 9.3%. Very nice. So we have a total of 14.8 minus 1%, 13.8%, and if you consider the brokerage fees and all that stuff, you have a plus 13% on these three trades, which happened in a total of, until we hit the target, in a total of 3 days and 12 hours. Not bad at all. Now the question is this always going to happen? Let's be realistic. We are very realistic here in ChrisFX. We don't want to speak bullshit, because we could claim that this happens again and again, and I could show numerous examples to support my claim. And for the new traders out there, it would seem like, of course, this is the deal, Chris is the real deal, but no, it's not like that, because many times consider that price will do this pin bar right here and will not even come to test this area. It will just vanish. Sometimes it will test this area and vanish. Sometimes this whole thing will not even play, so we might get a break down here and then continue on the upside. Okay, but this is a very nice way to exclude you from taking this trade. So if you take losses, you would take only these losses right here, okay? But if you win, you see how much you win when you take these trades, all of these trades right here. So this was our today's strategy. Feel free to go back and rewatch this video. I think I made it pretty simple. And if you want to ask any questions, go ahead and ask them down below. And if you have found yourself being profitable with any of those strategies that I show here on ChrisFX, then you can go ahead and click on the first link down in the description and check out Audacity Capital. You don't have to go through any challenges or verification phases. You can just pay a small monthly fee of £99 and start trading with a real account of $15,000. And each time you hit a 10% target, then you split 50% with Audacity Capital. 50% goes to you, 50% to Audacity Capital, and then they immediately double your account, and the same procedure happens again and again. So feel free to go ahead and click on the link down in the description or the first link on the comment section. Hopefully you liked this video. This is gonna do it for today. Thank you all for watching. Until next time.